Welcome to Bitcoin Escape Plan. We're coming up on a monthly close tomorrow, and we're seeing a very important trend shift that's about to happen for Bitcoin on the lower time frames. Later on in the video, we'll go over the higher time frames so we see the correlation between those two trends coming together, and really just kind of give you an overview of what we can expect to see in the near term in alignment with what we've been talking about in previous videos, as well as an update on the weekly SMA and just the general trade sentiment at the moment. If you are new to the channel, you can go over to bitcoinescapeplan.com. Every Monday, right after I finish this video, I will release this week's newsletter. So if you see this video really quickly, you might be able to get it before it's out, where I just go over in depth the price so that you can check that in your email, separate from these videos. If you would like, go over bitcoinescapeplan.com, go check it out. Let's get into the video. Apologies already if there's construction in the background. I have no control over that. Anyways, so 4-hour chart, what's going on at the moment? We saw another break down to that middle band anchored VWAP that we talk about in every single video. And as you can see, it did respect it quite a bit. Now, for anyone who's new, this is drawn from 2011. This is not something I touch. I just leave it and I let it tell me what it needs to tell me. So we've seen wicks below it. This is a significant wick below it. For the price to close back above that is actually really impressive. Not only did we break down below 65K again, and this blue trend line that's coming from the 59.9K lows, but we managed to close that 4-hour candle above it. That's crazy. Like, I hope you understand that that is crazy. Again, this is a tool that I have drawn from 2011 on the chart. This is not a line that I drew for the daily, or an indicator that is like showing me something specific. This is what the price itself, the anchored volume profile and the anchored VWAP, that's what it's telling us, is that this price is so important that we need to see closes above it in order to have any bullish momentum. And really what is happening is we're seeing the downtrend anchored VWAP. This one is from the 126. This is from the lows in 2011. This is continuing to get dragged down lower and lower. And I believe by the time we actually have a crossover is going to be somewhere in here in the first 2 weeks of April. So that's really what we need to prepare ourselves for now, is what is the price going to do between now and then? And there's a couple signs that tell us kind of clearly which one it is. So this is the downtrend from that first high after the 59.9K highs. As you can see, we've broken above and below it several times. Price is currently kind of struggling to stay above it. And we have interacted with this blue trend line down from the 59.9K lows. And again, I've already moved this. I haven't removed it since here, but technically this should be even lower now that we have touched there. I'm gonna let it stay for a little while because at least candle closes are staying above it. But as you can see, it's definitely showing more interaction with that one than the red one, which means as we continue to go further and further right, it's more likely that we break down below this blue one than it is that we break up above that red one. And it's more likely, I think, that we're gonna get rejected off of that red one, probably somewhere around here. 74 to 70K. Again, apologies for the construction in the background, but that's what we're looking for in the short term, is how does it react to those trend lines and how does it react to the anchored VWAP levels. So this is the bottom band of the downtrend from 126. As you can see, for anyone who's not familiar with these, essentially think of these as magnets. So the price is magnetized to this level and it wants confirmation of, are we staying above it or are we breaking below it? So again, very, very good sign for us to see candle closes above it. When they wicked below it, that's putting pressure back towards this guy. But at the moment, we're failing to get to this bottom band. And really what that's signifying to us is that we're less and less likely to touch. This is the middle band of the higher one, which is currently at about 84.2K, which originally was like the highest I believe that we could get to is about 86. I think that's less and less likely as time goes on. I don't think that's going to happen. I think we are going to get rejected Again, somewhere between 74 and 72 at this point, I think is more likely where we're going to get rejected. And we're nowhere near the top band of the elder VWAP. That's the older one from 2011. That's currently at 95K. We're not going to touch that. It's not going to happen. I know that probably makes you sad, but it's not going to happen. The one saving grace is we are actually expanding the volume profile here quite a bit. As you can see, where the most volume is actually way down here at 27K. That's where the majority of the volume and the price is at the moment, the point of control. And you can see here that we're actually starting to fill up pretty nicely because we've been in this channel for so long that there is a decent amount of volume that's stepping in. And really what we have to wait for is to see all these people who bought above here, which is a significant amount, by the way. Are those people going to panic and take profits or losses rather at 5 or 10% rather than, significantly down here? We need those people not to panic. These are mostly the IBIT buyers. These are mostly, anyone else who has indirect exposure to BTC as opposed to self-custody. That's the psychology of those human beings that you need to have conviction. And it's not super likely that they're going to retain it. It means the higher that we get on this initial push, the more likely that it is that those people are going to say, you know what, that's actually good enough for me. A 5% loss is better than a 35% loss. I'm going to cut some of my position. So that's just reality. That's the market pressure that we're going to have to see moving forward alongside all of the uncertainty and everything else. So in the short term, for the 4 hour, what we want to see, we are currently just barely above the 4 hour SMA. I think literally when I was writing the newsletter, we were below it, and we've now been breaking above it as I started recording this YouTube video. But this is a pretty clear downtrend. It is curving slightly to the upside now, but again, I'm not really expecting us to go much higher than 72 to 74 on this initial run, and 73.8K is the March 2024 all-time high. So if we fail to get above that, that would be seen as a serious psychological failure and would be enough for us to continue to go lower. So short term, that's what we want to pay attention to. 65.9K, about 69K, 69K being the all-time high in 2021. So also psychologically important, as well as a daily close level important. And then we're just going to continue to see this range get tighter and tighter and tighter until we finally break to one side or the other. And currently it is definitely favoring the downside, not the upside, especially as well the longer that we stay below this red dotted trend line as well. So that's the short term. That's what we need to pay attention to. I do expect short-term volatility to the upside, and we can actually see that more clearly on the higher time frames. So if we go to the higher time frames, if we take a look at the monthly first, you can see we are currently on 6 months of red candles. Now we're just barely red. Now there's a possibility, and actually this is worth noting, we're seeing a compression on the 4 hour Bollinger Bands, which means that we will see a snap to one side or the other very soon. And I actually do think that it is going to favor the upside temporarily, which is why I'm not panicking about my terrible entry on my perpetual trade that I'll go over later. So that's what we're looking at the moment, is we have now 6 months essentially where we've been in bearish downside pressure, which is statistically uncommon. Not impossible, but statistically uncommon. It's only happened 1 or 2 other times, so it's not something that we see every year. This is very commonly just a bear market thing. I don't understand why people keep repeating that the 4-year cycle is over. I think those people are delusional, or they don't understand how to read charts, but it's very clearly that we're still in the 4-year cycle. This is almost identical to here. Same thing. What's going on in March, April? We've got chop between June and April. That ultimately resolves to the downside. What is it in 2018? Pretty much the same thing. We've got significant chop into April, May. That eventually resolves to the downside. And it's the same thing for 2014. So that, until proven otherwise, is what we need to expect is going to happen with the price. There's no other way to swing that. That combined with the reality of, look at us here on the weekly, If you remember in previous videos, I really wanted us to be above 70.2K because that's the 50% range, 50% mark of this range. The longer that we spend below that 50% mark, which at this point is 1, 2, 3, 4, 5, 6 out of the last, whatever that is, 9, 10 weeks, we have spent below the 50% mark, which puts more pressure towards us being at 64K or lower, as opposed to 76.2K or higher. And again, you have to remember the psychological levels of 73.8K being the March 2024 all-time high, right around here-ish, and of course 69K being the second peak in 2021. We are below both of those prices psychologically, which is not a strong position to be in. That's going to make them form as resistance instead of support. So since we're on the weekly time frame, this is what we talk about every video. I talked about this in last video as well. And this is also significantly lower already. I think in the last video, it was at like 80.7, I think. I would have to go check. Already the weekly SMA is down to 79.2. And it's going to continue dropping. There's nothing that tells me that that's not going to continue dropping. Even if we were to rocket up to 76.2 and close there at the end of the week, again, after getting probably another monthly close that is red, or even if it's flat, you know, it's still like, it puts pressure towards us getting at least one green month. But you have to understand that a quote unquote green month could literally be to here. It could literally be to 72.8. That would be considered a green month, technically, if we were able to close where we are now and get to there. I would not consider that bullish. That's consolidation at best. You know, like that's our best case scenario, is that we're going to get to there. It is not looking, you know, especially looking at this on the monthly time frame, we are so far below the 50% of this range on the monthly time frame. It's just not really speaking to us randomly completely shifting the momentum. You know, the momentum is more likely that it is going to continue to the downside lower towards that 44K pivot. So that's what we're looking for in the short term, is once we have the March close, which is tomorrow. So on Wednesday's video, I'll be able to give a more complete update about wherever that level closes. We're still going to see this weekly SMA continue to drop down. By the time we actually interact with the 76.2K pivot, it's going to form as resistance. I think it's going to be almost identical to this guy right here. This is the 47.6K pivot, which is essentially half of the 96K pivot that I was originally hoping we were going to get to, but this is pretty much the same thing here. You can think of this as January of this year, essentially, where this is the last lower high, or the last higher high rather, until the price continues to fail down. And this is what I'm expecting, is the weekly SMA is going to break through that Fibonacci pivot, which for us right now is 76.2K. Price may, by the time it finally interacts with it, as you can see, very similar chop pattern to where we are right now, and exactly the same time period, January to February to March. You know, some of it's inverse. You know, like in this one, February had the highs, as opposed to it was actually January that had the highs for us, whereas January was a complete drop down in 2022. It doesn't really matter. The point is that it chops and then it continues to resolve lower. That's all that matters. So that's what I would be initially looking for. Is this one in particular is for the end of March. That's a high, and as you can see for where we are currently, it is the inverse of that. We are actually at the relative lows for March. So if we don't regard this as the attempt at the weekly SMA, which we very well may, you know, that's at least the first sincere attempt at the 76.2K pivot that's regarded as a failure. So that could be regarded as a failure of the weekly SMA, but I'm inclined to believe that we do have an actual interaction with the weekly SMA, just because history tells us that. It doesn't always do that. In 2018, I believe it failed a little bit lower. So again, it's quite possible that we've already failed that and we are just going to continue to go lower, but it's less likely that we're going to get 7 consecutive months of red. I believe 6 is the most that we've seen, to be honest. So it would be not impossible, but not statistically likely for us to see March close negative and then for April to also close negative is not very common. And again, April closing positive is just anything that is above 66.7K, which would not be regarded as bullish. It would just be regarded mostly as consolidation that ultimately resolves to the downside. So that's what we're looking for at the moment. Where does the weekly SMA finally have an interaction with the price? And it's very likely, since we're already below that 80K pivot that is super important from the 2025 lows, that it's going to continue to get pulled down and probably be either right at 76.2K or just below it by the time we interact with it. And quite frankly, I don't think it matters at this point. I think that that is going to form as resistance, probably going to be a great short entry, and then the price is going to continue to the downside. There is one channel that I follow. They make way more money than me. They're smarter than I am. He's talking about how it's possible that the price goes to 80 or 90K, but he's a trader, and I don't know if he cares about like the broader like price implications or I'm one of the only people that I know that talks about the price narrative the way that I talk about it, like the psychological power of 100K specifically, as well as like 69K, 73.8K. It's like people understand that those are the highs, but I don't think they understand like the psychological and numerical weight that the price puts behind that is very significant and actually hard to, the price will regard it as either support or resistance, and it'll be obvious which one it is. And I think for us, it's going to be regarded as resistance, which will ultimately push us back to the 64K pivot, and then we will break it spectacularly to the downside. And you can even see this on the higher time frames. On the weekly, we are still curving down lower, and it is the same as well on the daily. The daily is starting to curve lower as well. I think that's every time frame, to be honest. 4 hours kind of sloping upward a little bit. Again, a slight recovery, but again, I would assume that's temporary, and I would assume that probably fails out somewhere over here. Maybe we get a punch a little bit higher, but I wouldn't really expect it to be much higher than 80K at possible, and it would be temporary. You know, same thing as over here in 2022. Yes, it did break above the weekly SMA. It got to the Fibonacci pivot, and then it failed it right after. So if we were to see that same circumstance, that means that the price is just barely going to get to 76K, and then it's going to fail, is likely what's going to occur. Now, it's not guaranteed, but it's likely what's going to occur. We also do not have any precedent for the price reclaiming the monthly SMA quickly. Typically takes 7 to 11 months. We are on month 4, and that price is currently at 89.7K, which means that we should not expect to see 89.7K for a minimum of another, call it 4 to 8 months, essentially, which is a long time. My overall thesis is still that we're going to see the relative bottom happen sometime between October and January, because that is likely when the bulk of the stablecoin pressure is going to resume. That's when banks are going to be offering people deals in order for like them to get a bonus off of how much stablecoins transactions that they are utilizing. That money is not going to flow just into crypto. A lot of that money is going to flow into the newly tokenized stocks. Why the hell would you buy a meme coin instead of tokenized NVIDIA? Like, that's where a lot of the money is going to flow. And then, as I mentioned briefly at the end of the newsletter, I do think that Coinbase, Robinhood, and MicroStrategy are going to be probably the only other stocks that I buy towards the bottom for Bitcoin, just because they will kind of function as leverage on that. And I may not, to be honest. I may just focus more on buying as much spot Bitcoin as I can, and then adding as much leverage exposure as I can tolerate on my Coinbase, rather than, I do think it's pretty safe in the long term. I would say more specifically for Robinhood and Coinbase than MicroStrategy. There's a lot of uncertainty around what exactly is going to happen with MicroStrategy, but the fact of the matter is they have like hundreds of thousands of Bitcoin, and I don't mean hundreds of thousands of dollars, I mean hundreds of thousands of Bitcoin. So they are one of the largest players in the space moving forward forever. I've seen some people think that, you know, they might get subsumed by the US government at some point, but that would only be if they go bankrupt. And as far as I understand, that is not very likely. Their loans aren't due until 2028. And like they would have to like basically lose like half of their investors and just like completely lose their ability to pay back the loans, which I think that they're pretty close to their break-even price, or they might be in loss already, but they're still raising money. SDRC is allowing them to continue to raise capital. So there's not really any reason why they won't continue to buy as the price goes lower, which will effectively lower their cost basis and therefore also make it easier for them to pay the loan when they have to, or reduce the possibility and likelihood of liquidation. So not super worried about it, but it will have a negative effect on Bitcoin as these other companies that are highly exposed to it are getting hammered. Like that's not going to be a good sign for Bitcoin. So to end the video, let's briefly go over that perpetual trade. The perpetual trade from hell. I'm now making my mom more money teaching her how to do this than I am personally making money doing this. This is where I entered a short and then panicked and changed it to a long, and that's one of the more foolish things that I've done recently. I'm now waiting basically for us to get back to around here, call it 68.8. Basically, if we could get back to 69K and show a little bit of strength there, I will probably add like 2 contracts just to reduce my cost basis. And then it'll be, by the time we get to 72, I'll be in slight profit instead of in significant loss. And really, if there's anything I've learned from this particular trade, because I was profitable on all my other ones, I was up like 41% before this one. And I still like this so much better than trading option contracts or meme contracts or meme coins. It's like not even close. You know, it's like considerably easier just to maintain exposures to the perpetual contracts. Even with a bad entry, it's still like you have the ability to add or remove to contracts in a way that is like, it just kind of makes me not want to trade anything else, you know? Like even like the buying MicroStrategy and Hood and Coinbase, like I think I would do that in an IRA. I don't think that I would hold those in a traditional brokerage. I would rather just buy more Bitcoin. And even quite frankly, there is an argument for buying some SDRC, but I don't think if you have like less than $100,000 in SDRC, I think it's a waste of your time, because $100,000 in it is like you're basically going to get like $1,100 a month in dividends, which is dope. But I mean, that's $100,000 that you have to have locked up instead of, and to make 11.2 grand in a year instead of buying Bitcoin at the lows. Like if I had $100,000 that I could do whatever I wanted with, I would much rather buy $100,000 worth of Bitcoin at 40K than I would just have it sitting in SDRC. So I really think that SDRC is like, it's a good like form of credit if you have a large access to capital, but if you're just like dollar cost averaging in, it's a very slow road, the same way as other dividend stocks. And I think most dividend investors that have any success are leaving out the fact that they have a 6-figure portfolio, and that's what it made successful, is like their job and their 401k is not like the virtue of their ability to trade, you know. So that's what I'm currently looking for, is if we can show strength at 69K, excellent. I'm going to add a little bit, and then I will probably get fully out of that position at 72. And then I'm just going to wait. I mean, me personally, I'm pretty confident in what I was saying earlier about we're going to see this cross by about April 20th. And we're going to know, okay, is it on this side of the red trend line or is it on this side of the blue trend line? Is my anticipation that we're going to fail off that red one and then break lower? It's possible that we can break above it. And as you can see here, that's probably where we would break above it. I just think it's going to be temporary. I don't think we're going to like continue out over to here for an extended period of time. And as this trend line goes higher and higher, it's easier and easier for us to break below it and for the price to be regarded therefore as bearish. And again, we are like, people are really stepping in now. So you got to remember, just as like we need these people not to panic as price gets to here, we need them not to sell out en masse. It's going to be the same thing here, where when the price does go a little bit higher and then gets hammered back down, we need all of these people as well not to panic. There's plenty of bullish signals global liquidity is going to rise next year. Global uncertainty is still pretty high at the moment. But me personally, just in terms of this perpetual trade, I'm really not panicking. I try not to live my life that way in general. I'm not gonna like freak out over being, $180 in loss. It's not the end of the world. I can just continue working and making that money back. All of my Bitcoin is fine. Like I'm not touching it, I don't have to worry about it. It's just sitting there waiting for me to buy more whenever I feel like it. And essentially, yeah, that's all that we really have to see is once we have this completion of this compression here, I do believe it will snap to the upside. And realistically speaking, that's just going to be, again, we need to be above about 67K to be regarded as a quote unquote bullish month for March. And it's like basically a flat month. It's like, I hesitate to even call it bullish. It would be flat. So that's what I'm looking for in the short term. And what would invalidate that is if we cannot get back above this downtrend line, as well as if we cannot get back above the bottom band of the anchored VWAP. And that's pretty much right where we would see like confirmation is the price struggling there, or does it shoot right back for it? So that's kind of what I'm looking for, is same as here. Like, we broke below it, but it was able to stay above it. We broke below it, it shot right above it in reaction to this trend line. We're currently negatively reacting to this trend line, so I think it's kind of going to be the same thing, where we might initially struggle a little bit and then shoot right through it, and then we're just going to come back down. Again, this is a magnet; it's not a brick wall, So it's like you can kind of shoot past it and then come back, kind of like a yo-yo or a slingshot or something like that. Like there's elasticity to the price around that level is the point, is it's not going to just like stick there. Unlike this one from 2011, where it really does respect that quite a bit. The candles close all over the place with this downtrend one. The candles close right above that 4-hour one, like the elder VWAP. It really does not want to break below that yet. Which means that when it finally does, it will be quite violent, and I will definitely want to be in shorts at that time. So me personally, that's all I'm focused on, is if we can reclaim about 69K, then I will probably add a little bit temporarily to that position, just so that when we do get that initial rise to 70 or 72, I can close either in less loss. Like at this point, I don't give a shit if I lose $30 or $50. That does not matter to me. I just want to be out of this position, quite frankly. It does not make sense to be in a long from up here with this price trajectory. It's terrible, do as I say, not as I do. But that's what we're looking for at the moment, is if we can see a recovery here, which I think is more likely, because again, statistically speaking, we only have one or two other examples on the chart where we even have 6 months of consecutive red candles. So the likelihood definitely favors that we're going to snap to the upside as a reaction and response to that. So we really pay close attention to tomorrow. If the price closes below 67K tomorrow, we probably will see a snap to the upside right after that. And we may even get it earlier, to be honest with you, depending, I guess, on where we close the day, which it doesn't really matter. We're so far below the daily SMA right now. Daily SMA is right around 70K as well. I would imagine we have one more positive interaction above it before probably another failure. But if we're thinking about it in terms of, are we going to get another clean entry? Another clean entry at the moment would be around 74, 75, which is going to be regarded as a failure of this trend line. So I would short the hell out of that if we do see another rise to that. But any momentum that we had here is starting to look like it is petering out and we are running out of energy. So that is something to keep in mind. Other than that, the strategy still holds true. This would have been a good long entry. This would have been good long entries. I believe this is where my mom took them, actually. So kudos to her, just making money. And I'm currently still trading with a very small amount of money in that Coinbase account, like less than $1,000. I'm not moving significant money into it until I'm like really confident in my strategy. And then I will start adding more to it over time. But currently, I think within the context of everything else I've talked about in the video, that is the likelihood, is that if we see a negative close for March or even a flat close for March, temporarily we will see a rise into April. Probably that begins failing by around April 20th, which is right around when these trend lines converge. This is a little bit later, but we would really expect to have confirmation of trend by around there, the 20th or 23rd of April. We should know, is it above this guy or is it below this guy? And that tells us everything we need to know. Nothing to really panic about. You know, keep calm and stack on, my friends. But not the time for altcoins. Definitely the time to be careful with exposure to leverage and just to kind of play smart, have strong rules for your entries and exits. And that's pretty much it. Go check out the newsletter, and I'll talk to you on Wednesday, give you more info about the March close and what we can expect moving forward. Thank you so much. Like and subscribe. I'll see you later.